Hello and welcome back to our Healthy Trading Habits series. In this installment, we are going to talk about when do trends end. Before we start, please read the risk warning. Our investment products and services are not suitable for everyone. It is possible to lose all or part of your investment. For leveraged products trading, it is possible to lose more than your deposit. Trading on margin carries a higher level of risk, and it is possible to be required to deposit additional funds. You should not invest money you cannot afford to lose. Just briefly about me, I am head of trader development here at FCI Markets, and the one thing that is important is that I've spent most of my career on the retail side, so I've made every mistake in the book twice, probably. And so, having survived and having graduated onto the institutional side of the business, I'm potentially in a better position to show you what doesn't work and show you what does work as I transmit the lessons that help me survive throughout the years. And now let me tell you why we are doing this series and why we do all of our educational content here at FCI Markets. It is because we are not just a broker. We are actively seeking passionate traders to bring on board our trading desk and to qualify for fully funded accounts. We want to make you a consistent trader, and we want to train you so that you can come on board and join our trading desk. So that leads me to today's session. When do trends end? As a starting point for many of our pieces, we show consistently bad habits that most traders demonstrate. And one of these habits is to constantly fight trends. This is the current picture on the Eurodollar at the moment of recording this video, which is the beginning of August 2020. And as you can see, during the recent uptrend, retail traders have been wrong all the way up. They started to fade this trend back in June, and ever since they've been positioned short all the way up. So typically we teach people to follow trends and not to fade trends. But there is a moment when the trend comes to an end. And that's what we're going to discuss in today's video, so you do not continue betting on a direction that has started to change. Here are the keys. You will need to start paying attention and fine-tuning your instincts and your eyes towards 4 pieces of information. Number 1, lower daily highs in an uptrend. Smaller range days, so when volatility starts to contract. A break of prior day lows in an uptrend. And finally, the really evident one, lower swing highs in an uptrend. Of course, you can invert everything for a downtrend. Now, the difference between numbers 1 to 3 and number 4 is that numbers 1 to 3 are really fine-tuning your eyes and your instincts to identify a loss of momentum, whereas number 4 is a very evident swing point that is lower than the previous. Now let's go on to some charts so that we can actually identify these and see what they look like. So the issue here is that trends don't change in the same manner all the time. The market is flexible, the market is always changing, so one rule cannot be applied each time in the same way. There are different ways that trends can change, and we need to briefly go over the few variations on this theme. Now I have added just a simple 20 moving average to this chart just for a little bit of balance for those that still have to brush up on their chart reading skills. And I've highlighted 2 kinds of examples here. In white, what you see are evident higher swing lows going up and lower swing highs going down. Okay, these are very evident. So you have a high, price is pushing up, it makes a cycle high of that uptrend, then it pulls back, and when it pushes up again to challenge the previous high, it fails, and it actually makes a lower high. So that is a very evident, that is probably the most evident signal that the trend is weakening and it is preparing to change. Now, of course, we don't know what's going to happen. Everything that we are talking about, we need to identify in real time. We're always trying to stack the odds in our favor, and we're never talking about certainties. We're never talking about a lower swing high will change the trend. A lower swing high will lead to lower prices. Sometimes that just doesn't happen. But at least you are paying attention and you are realizing that the trend is weakening. This makes all the difference in your trading. So proceeding, let's just focus on the lower swing highs now. So as you can see, once again, price starts to move in something we might call an uptrend, a very small uptrend, makes a high, pulls back, but makes a lower high here. And then price breaks lower and there's a bit of downwards momentum. It pushes back up. It makes a higher high. It pulls back, and then it tries to push again in line with the trend, but fails, and it makes a lower swing high, and then price falls down. Something very similar up here in the recent extreme volatility we saw in March 2020. So as you can see, when price went all the way up to 115, it came back down with force, and then it tried to rally but printed a lower high and then fell through. The lower swing high in an uptrend, or the higher swing low in a downtrend, I only have one example here, are a key feature of a change in dynamics. But there are different ways that a trend can lose strength, and they are more subtle, and we need to start paying attention to them in real time, understanding what the market is actually doing. So in orange, I have color-coded these examples. So what you see here is when price challenges the previous high, it takes it out, but then what happens? It has a very narrow close, and the next day is a narrow range day. So this is telling you that the market is losing strength. Okay, it's a loss of momentum. That's all it is. It is just a loss of momentum. The market is not pushing as strong as it used to. And this is an important piece of information because whether the market continues or whether the market then reverses, it usually gains a bit of strength when it does make the next move. So the volatility contraction in the short term, showing the inside days or the narrow range days or the little change closes, this is important because it is another sign that the dynamics are changing. Something is going to change. And in fact, what happened is the next extended range day was actually a bearish engulfing, changing the nature of the market. So there was no lower swing high, but what we had instead was this volatility contraction, price stumbling and unable to push higher. And instead, the stronger momentum started on the downside. So we were paying attention, like I said before, to momentum shifts. Same thing down here. Price is pushing lower. It tried to push through the previous lows, and it stalls at a round number. You'll see this very often. The round numbers do act as support resistance levels. And there's a volatility contraction. You can see the inside day, and then a little changed close with a rejection from lower prices. This once again is telling you that the next move is probably going to be up, and after the volatility contraction, you do have a strong range day. As you can see, price is coming down. They're in some kind of a downtrend, and then they start to lose strength. A little change closes just after touching a round number. And then when does momentum turn? It turns strong to the upside. Same thing down here. Price falls further, and then it stalls once again. You have the inside days. I guess you could say that there were inside days here as well, but as usual, they don't always mean the trend is changing. Okay, these broke lower, but if you were paying attention at the time, you would have noticed that there was a slowdown, and so you're simply paying attention to what the next move is. So once again, here they're stalling around a round number. You're paying attention to what the market's doing next. The market starts to trade in the opposite direction, and so you consider that to be, at least in the short term, the leading direction. And the same thing down here after this big drop, this very violent drop. The market stalls, a little change close, little change close. So you're looking for momentum now. Where is the market leading next after this pause? So this was a theory. Now let's go and discuss charts up to date. Okay, this is where the theory ended, and now let's discuss charts as this new uptrend moved. So retail traders and aggregates started to basically fade this trend as it was developing into June 2020. So let's see what happens. Let's follow the market up. So the market goes up, and then what happens? And then it makes a high, it makes a cycle high, and it has an inside day and a little change close. So we're paying attention, and we're saying, okay, a little change close. So now we're paying attention to momentum. Where are we heading next? The market makes a positive close, so we're still trading to the positive, to the top side. We're still trading up. The next day we're trading up. We make a higher high, and then the market starts to come back down. So what's the other thing we talked about? We talked about the lower close in an uptrend. So the market finally made a close lower than the previous day. So momentum is shifting in the short term. Okay, so the next day we're definitely not going to take this long. We're either short or neutral. And so that's what happens. There, and then we make the lower swing high. And then from there the market probes lower. However, the trend didn't end. And at a certain point, after making a bit of choppy moves, the market continued. And then what did it do? So it made a high just above the previous swing high over here. And then it stalled. And then the market needs to wait for the next direction. So we're looking for momentum. As there was a little change close, and the close below the previous day's low, we're paying attention. The next day, however, the market continued. So we're waiting, and after this signal, we can probably start trading onto the long side again because momentum is shifting up. The market continues, and then it stalls once more. So once again, we have the volatility contraction, and we're waiting for direction. The market continues up, so we're still trading long. And then the market makes a cycle high up here at 119 with the lower close, and then the market breaks lower. So right now, what we're doing is we are paying attention because we had the little change close, we had the break of our previous day's low, and we need to wait for further information. But right now, the trend has paused, and momentum is currently slightly to the downside, and we're just waiting to see what happens next for the next indication of directional momentum. This is New Zealand dollar, so we're going away from the euro. Let's see what happened to the Kiwi on this recent uptrend. So we have the move up, and then we have the cycle highs. So you can see little change close, little change close. So momentum is weakening, and we're paying attention to what happens next. We have a nice move to the downside. And there was a little bit of an attempt to push the market lower. We had also the lower swing high here, which was challenged, and then the market continued. The market is going up, 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 and then it loses momentum. Look at this. Little change close, so we have to pay attention. And the market starts to push a bit lower. The pullback was bought, on the pullback, lost momentum. Momentum is back to the top side. And then it continues to the top side. And then once again, you have a little bit of a pullback. And the market continues. It makes a high, consolidates, makes a higher high, but it made it basically an inside day. And now we've closed below a previous day's low. So momentum right now is currently to the downside. The trend has stalled, and we are either short-term shorts or we're flat. So what we are actually doing is we are paying attention to how the market is acting on a daily basis. Is it continuing to print higher highs and higher lows in a strong and evident manner, or is it stalling? And this already gives you another piece of information. It doesn't necessarily require the lower swing high to reverse course, just like it doesn't really require a big candle print, like a big spinning top or a big doji or dragonfly doji or an engulfing pattern to turn things around. These more subtle shifts in momentum are usually the telltale before a shift in market dynamics. Just look down here. After this big drop, the market just consolidated, and then it shot up in the opposite direction, simply on changes of momentum. As momentum stalled, okay, the downside momentum stalled, and then momentum started up in the opposite direction. And all it takes is a bit of patience to wait for the market to lead the way, to tip its hand, and to show you what the path of least resistance is. But at least by fine-tuning your eyes and your instincts to these losses of momentum and to the previous day's highs and lows, and to the lower swing highs and lows, when things become really evident, you will start to pay attention to these early warning signs, and you'll be able to get out of your trends before it's too late. I hope you enjoyed this video, but if you need further guidance, here are a few things you can do. The first thing is subscribe to our Thought Leadership blog. This is where we post educational content and our morning notes every day. The second thing is follow our Twitter calls at FCI Ltd UK. This is where we post only the most influential market moving events each day and the occasional chart pattern we believe is important on any given day. And finally, if you want to make the transition from being a retail trader or even a profitable retail trader to becoming a professional trader trading a funded account, then get on board, come to our FX Training Academy, and make that transition. We are always happy to hear from you. If you have any questions or comments, just write to us at client.support@fci-markets.co.uk. Give us a call, or even come and visit us in our headquarters if you're located in the UK. This is Justin Paolini for FCI Markets, over and out.